Hey guys, Kunal here, Bulls on Wall Street. Guys, we had a crazy day in the markets. We want to give you a quick market update as the structure of the market may be starting to subtly shift. And so I want to take a second to really dive into what's happening. So as you guys have noticed, we've been on basically just a stage one massive bull market really since January in all sorts of names. Stocks like Meta and Nvidia all up, right? Hundreds of percent, twofold, threefold, and everything has been priced really for perfection, this whole year. And the trend has been our friend. And you know what? Being a bear or betting against the market has not been profitable at all. Frankly, we haven't had a series of back-to-back nasty days in so long. And every time we've even had really, really bad days, the market's rebounded with such fervor. It's like it traps us to the downside and then just rips back. But lately, something has shifted a little bit that I think we need to be aware of and really watch. So if we look at the QQQs, first of all, you can see that we've been really hugging this 20 SMA since the springtime, and really since, like if you see here, right, it's coming in since March. We've been hugging this 20 SMA the whole time. We did kind of shake under it for a couple days here or there, but it's been just a real steep vertical trend with minor pullbacks. And guys, those are the best types of trends and pullbacks when they're just 2 or 3 days and they're really shallow. That gives you a market where you can hold overnight, take additional risk because the dips are getting bought and they happen really, really fast. But what we're starting to see here is our MA starting to flatten out. And today, the QQQs has pierced under that 20 SMA. Now, that doesn't mean anything per se because it's done it quite a few times here for a day or two. So what we would need to see is that subsequent follow through to finally get a little bit fearful. Like, for example, tomorrow, if the market just gaps up and continues on like it has been and we get back into the range, then once again, we've been faked out. But I think tomorrow and the next year are going to be really, really important is if we start to build under this 20 SMA and start to trend down, that puts the 50 SMA into the cards. And, it's not that far, only 10 points. But when the Qs drop 10 points, frankly, right, individual stocks are going to drop, at least the momentum names can drop 10, 15%. And so I think this is something that we've got to be really focused in on. If you're holding a lot of overnight risk, you want to probably take some off the table here, right? You want to lower your risk profile versus like when the market is trending like this, right? You want to actually take on exposure, more and more exposure, because the market will keep gapping up and doing these kind of things. But one of the things I think that we've got to be a little bit nervous about and the ascent of the market. So it doesn't mean that the trend is over, but the steepness of the trends can change, right? And it can put you into a different stage of the markets. And as we start to flatten out, what we started to see in this particular earnings season is really these reactions to the big tech companies, and they're all starting to gap down. You had Netflix, right, get dusted on earnings, and you had Tesla, right, getting drifted on earnings. AMD today, I mean, this is a classic, right, risk off liquidity move. What I mean by liquidity is you had a gap up in AMD, and then boom, the sellers popped in, right? So people are raising cash here, and you get a $13 move to the downside without really even any bounces. And now you can see, right, this chart is completely broken if it gets under 106. These are things that we have to be really aware of, right? Like PayPal today, right? Look at this, 12%. In the past earnings season, everything was gapping up and trending because we were so near lows, and everything, even bad earnings, were getting really bought up. But now the market, because it's priced for perfection, because it's just been going up for so long, now all of a sudden these earnings are starting to matter a lot more. Like if you see Shop, like it spiked up on their earnings and they got dusted off, right? 8 points. You can see, right, like this U is all over the place. Like if this thing starts to fail, then, right, we have another mishap. But you have PayPal, you have AMD, you have all of these names. Like if you look at Etsy today, right, like also down 8%. And it's not like it's giving up months worth of gains, but this is a subtle shift in the structure of the market that we have to be aware of. And so, as we come into the rest of this week, really watch this QQQs. If we start to build and base under here, then we've got a straight shot to the 50 SMA. And that's going to reset a lot of charts, but it's also going to take some of that kind of risk on momentum trading that's been so easy this year, and it's going to make it more difficult. When you need deeper and deeper pullbacks, then the speed of the market starts to change, and the ease of the market in which you're doing momentum patterns will start to change. So, hey, this doesn't mean anything just yet. It's just one down day, 2%. So what? But if we look at these big tech companies, these leaders, what's happening to them, we should be a little bit wary and think, hey, it might be time to take the foot off the gas a little bit, and it becomes a trader's market again. Right now, this has been just a epic swingers market. You buy and hold and swing trade, right? Draw some lines on a chart and you make money. But now we're going to get into a stage of the market where there's still going to be awesome, awesome longs, but there's also going to be shorts, and there's going to be consolidations. And so now you got to put your trading hats on. Everybody looks like a genius when the market goes straight up. But when the structure changes like it has been the last week, right, then we've got to be a little bit careful. We got Apple coming up and some other names, but even just judging by how Microsoft reacted to its all-time high breakout, these are little bit of red flags that the market needs to pull. It got overheated. And so, word to the wise, it doesn't matter if the market goes up or down or sideways. We can make money, but it's the ease of making money and the style of trading that you have to do to make money that changes. Instead of a buy and hold, swinging, doing options and taking on leverage and risk, which is awesome and actually the smart move to do when the market's going straight up, you want to de-lever, de-risk when the market starts to go sideways. So just keep that in mind, and let me know if you guys have any questions. We had an awesome day in the chat room. It's just been a great year. I'm excited for the market to turn. Frankly, let's put our trading hats on and sharpen our swords. This is going to be a fun month.